The technology sector has gained nearly 20% in 2023, but this newfound strength is about to get put to the test come earnings season. For more on what to expect from the tech earnings this quarter, let's get to Yahoo Finance's Allie Garfinkle. Allie, what are we keeping tabs on?
Good morning, Brad. So looking at the markets, you wouldn't know it, but tech is actually on pins and needles right now. On one hand, right, you have the sense that rally looks pretty good. And on the other, there's a lot of concerns about the Fed and the sense that the sector is a little bit unsteady. So I talked to a bunch of analysts trying to understand why, and sort of a group of key themes emerged, and there were actually a lot of them. There were 4 of them that everyone brought up time and time again. And I'm just going to break them all down because there's a lot to get through. So first, number one, the Fed, right? It's not a secret that tech was slammed by rising interest rates in 2022. And the idea that we're seeing behind this rally is that there's maybe a light at the end of the rate hike tunnel. Now, we don't know that for sure, though. And what the Fed does next will determine tech's priorities, right? So let's say the hikes continue. The focus then will stay on profitability and cost cutting. If there are no more hikes, though, we're back in business. Tech growth mode is a go again. However, we don't know that. And I think the assumption that growth mode could be a go again soon is maybe dangerous in setting up investors for disappointment. Now, next, digital advertising and cloud slowdowns. It's interesting because my inclination wasn't to put these together, but every analyst I spoke to was inclined to put these together, sort of describing them as these twin slowdowns. Now, what does that mean, right? Digital advertising on one hand is further in the cycle. We've been talking about the digital advertising slowdown now for 6 months, 7 months, 8 months, a year. It's been a while. However, the cloud slowdown is relatively new. In my conception, we really started talking about it. It really started hitting headlines back in Q4. I'm going to remind you of some of those Q4 numbers. Amazon Web Services actually reported a sales miss. It was a small miss, 21.3 billion actual versus 21.76 billion. However, that kind of slowdown is existential for Amazon. I don't know how many times I've said on this show that AWS is a stalwart of Amazon's business and has bolstered a lot of growth in other areas of the business. The same to a certain extent is true of Microsoft, which in Q4 also warned that there were going to be these slowdowns in cloud growth. So the bottom line on these kind of twin cycles is digital advertising is further along and people are more comfortable with it, and cloud is less far along, and it's made some folks out there uneasy. Now, I'll bring up AI really quick. It's going to come up in these earnings calls, but one important thing to remember about AI is that for some of these companies, there will be material effects imminently, but for most of them, those are very far down the line. I'd actually like to direct you to a PwC statistic that AI could contribute 15.7 trillion to the global economy by 2030. There's a reason that's 2030 and not 2025. This technology does still need a moment to develop. However, it is developing fast enough that we will see it discussed. And I think it's important to say AI has given people in tech a lot of optimism, a chance to think about the future after what the last year especially has been tough. Now, the last thing, of course, is layoffs. I believe according to layoffs, FYI, about 170,000 people in tech have been laid off in 2023 so far. And what is going to happen in this earnings cycle is we're actually going to start to see some of the numbers come down about what the kind of money that has saved for these companies. I'd actually love to read you something that Andrew Boone, an analyst at JMP Securities, said to me just yesterday. We're going to see the numbers behind the cost discipline story, and that's going to be one of the drivers of stock performance over the next 6 weeks. Now, to bring this all full circle, right, we're going to go back to the Fed. If the Fed continues hiking rates, that profitability is going to be that much more important. And of course, the question that everyone asks about layoffs is, when do they end? And I think it comes down to we don't know, and it depends on the Fed to a certain extent. So if you're out there and you're like, well, okay, what's the bottom line of all this? I heard the word cycle over and over again. Business cycle, rate cycle, hype cycle, as referencing AI. And the sense I got was that tech is sort of trapped in this pile-on of cycles that are going to take some time to iron out. But until that moment comes, I think a lot of analysts are going to still be asking the question, where is the bottom? And I think nobody knows the answer.
I guess we'll find out. Thanks so much, Allie. Appreciate it.